So my screen is visible, right?
Yeah, it's visible. It's okay.
Okay. So basically, I'm trying to predict like the output results, like the close value. Based on the close value, I'm trying to predict the what would be the my prediction, and for that, like I had gone through some introduction phases. So introduction phases, what I've understood is that earlier we have had some algorithmic trading done on this, and we had some back testing also done on based on the algorithmic trading, but they were not giving very accurate results. Back testing sometimes used to work, sometimes did not used to work, because stock market, as we all know, has too much of unpredictability, and because of the high volatility, so because sometime it will be going very high, very low, so those challenges are always there. So for that reason, like I have tried to look at it from newer perspective, trying to predict the stock market output from ML and using ML and advanced machine learning algorithms and also deep learning algorithms. So the challenges that we have for this is like we need some higher accuracy and maximum accuracy, that, as we all know, in stock market is around 70%, that can be that we can try to achieve, and still our goal will be to minimize errors using ML algorithms. So initial things what is done in the introduction phase is the algorithmic trading, and backtesting never is to work so well. So I've gone through various literatures through that. I have listed over here around six literatures that I've gone through. Basically, I've gone a total of 14 reports, 14 research papers, and from that, like I have tried to scan through all the different dimensions, like whatever I have used in my project. So basically, I've tried to analyze in my project, like basically what are the earlier trends, what are the earlier techniques and which have been used in stock market, like the earlier techniques have been fundamental analysis and technical analysis, then algorithmic trading, and then later on I have actually gone through trying to understand like what are the different ML perspectives, from the ML perspective, what are the different machine learning algorithms that can be used. So I have tried to research through ARIMA modeling. I have tried to research through LSTM. I've tried to research through PCA. This is which is principal component analysis. So all this I have gone through via the literature reviews. So these are some of the report articles that I have listed over here. So there were some of them were conference papers, whereas a few of them others are like the journal research papers. And then let us go come to the problem statement. So what was my problem statement is that earlier we already had fundamental analysis, which has been used for long-term investment. Technical analysis, actually, we try to understand the trends in the stock prices based on momentums and volumes. And based on that, we have different technical indicators which are there in market. Like we have RSI, we have Bollinger Bands, we have MACD, so we have like some other trend indicators like moving average mostly we use. So those are the trend indicators that we are using in the stock market right now, and they are actually all some they're doing some mathematics, some empirical calculations based on the moment is all about. And then there's some algorithmic trading which is also there in the market. So right now my approach is to try and look at it from a newer approach, that is using modeling techniques. And my approach will be to do a more easier and simpler modeling techniques. Initially, I'll start with simple machine learning techniques, and then I'll go on to the advanced machine learning techniques, and then go on to the deep learning techniques. Apart from that, I'll also be using some of the statistical algorithms, some of the statistical analysis. Initially, I'll start with the statistical analysis point of view, and then later on, I'll take it down to the simple machine learning algorithms, then go on to more complex machine algorithms, and then to the deep machine learning algorithms. I'll also try to look at it from the ARIMA time series modeling and try to find whether, like my current data set under consideration, whether that is feasible for the time series analysis or not. So those things and all will take care. And our obviously the ultimate goal will be try to minimize losses as much as possible. So that will be our problem statement. Accordingly, the project objectives will be aligned with that. So as I've already explained, our lot deal in problem statement itself, that we'll do just a lot of modeling over here. And then we will also do initially we'll start with the hypothesis testing. We'll do some feature additions. Feature additions is, that will be like we will have the close price, and based on close price we'll do some we'll take some simple moving averages. We'll take simple moving averages for 7 days, 13 days, 20 days, 100 days, 200 days. So all those simple moving averages, what they will do is they will try to smoothen out the curve for the close price of the target stock price. Right now, our the stock data set that is under consideration is an SDFC data set. So for that we have the close price, and based on the close price, we will do some we'll do some feature addition. We'll take the simple moving averages. We'll also even take the exponential moving averages, and then we'll collect the right data. So and then we'll also do some feature engineering. And feature engineering in the sense that we'll take some lag value data, and we'll also do some like some of the columns are there which have lot number of missing values, and the number of missing values for those columns were more than 100. So definitely we could have applied inputting median mode as one of the ways to take care of that, but because number of missing values were more, so those columns I will try to do away with. And then so those things and all we'll discuss later on data preparation phase. So in this our project objective, as I can summarize, is that first we'll take the right data. First of all we'll do a lot of engineering to understand the right stock data. So we cannot do this analysis on every kind of stock data set. So here we have taken the SDFC stock data set because that data set has a lot of good history behind, and it has like kind of some kind of distribution it gives, wherein you don't have like too much of unbalance in the data set. So those things has to be taken in consideration while choosing the right stock for doing modeling algorithms, for doing the modeling algorithms on them. And then once having chosen the right data stock, we'll again go on to the different modeling perspectives. So we'll start with simple modeling, then go to complex modeling, and then we'll have like some of the metrics, error metrics, which will actually decide the how much efficient our data modeling techniques were. So some of the metrics that we'll be using is mean absolute error, then root mean square error, mean absolute percentage error, median absolute error. So these will be the error metrics that we'll be using for regression modeling techniques. Then our project methodology will be like we'll initially start with, like as I said, we initially start with the statistical analysis techniques. And the statistical analysis techniques will be doing the hypothetic testing. So in hypothetic testing you'll be using one sample t-test and one sample jet test. So in one sample t-test, we actually, because we know that a t-test or jet test hypothesis testing is always done at the mean values. So we'll actually be taking the 7 days, 13 days, all those mean averages for simple and exponential averages. And obviously we know that for one sample t-test if you are doing, then for that the sample size will be less than if it is less than 30, then we will be going to do t-test matrix. If it is more than 30, then we are going to perform jet test matrix. So those two hypothesis testing will be starting with, and then later on we'll move on to simple modeling algorithms. Like we will start initially with the classification algorithms. Why we'll start with classification algorithms is that first I want to do some hypothesis testing, and I have based some rules for the hypothesis testing. So hypothesis testing, what the rule is that suppose I taken a 7-day average. Now if the 7-day average, whatever I got the result from the hypothesis testing, so I got a p value. So if p value is less than, initially I started the null hypothesis that whatever the mean I'm going to get for the next day is going to be the same as the mean that I've calculated for the 7 days. Suppose I take 7 day averages. So based on that, my hypothesis testing will be that, null hypothesis will be that next state will be the same. Suppose p value is less than 0.05, that means I have to reject the null hypothesis, and then I have to take a conclusion that okay, either the value can be less than the previous day or higher than the previous day. So my rule will be that okay, whatever my simple moving average value is there, and whatever the next value average is there, and the next value next day close value is there. If the next day close value is less than the simple moving average, then I'll say that next day the price has to fall, and if and the vice versa, the price has to rise. So based on that, I will actually decide whether the trend is going to be upward or downward. So based on that, my hypothesis testing, I apply that same technique for the entire data set, and I'll calculate what is the average efficiency I got from when I did the hypothesis testing. And after that, I will do the classification modeling. So in classification modeling, again, what I'll do is I'll again do a feature engineering. I have a closed value. So based on the closed value, whatever the previous day value is there and whatever the next day value is there, based on that, I will decide, okay, what is the trend actual, what is the actual data? Real data is, suppose if the previous day value is less, then I'll take the data as zero. Zero will be means that the trend is going to fall. If the previous value, if the next day value is higher, then in that case I'll say that okay, my directional value will be 1, that is the next day it is going to rise. If it is going to be the same, like whatever the previous day and the next day the close value data is same, then my value will be 2. 2 will be, it's a neutral. So I mean, it's a sideways. So those will be the my actual values, and based on that, I have created a new variable, that's a direction variable, which will have three different elements, 0, 1, and 2. And based on that, I will do a classification modeling. For classification modeling, I have applied some different techniques like autokeras and KNN and logistic regression. And from that, I will get some efficiency. I'll get some confusion matrix. And from there, I'll get what is the accuracy. And then I'll be comparing this accuracy of this logistic regression with the hypothesis testing accuracy that I've got. Or the assumption that may be followed is that the modeling techniques should give me higher efficiency compared to the hypothesis testing accuracy. But then we'll have to see some of the time the data set will be such that it can be the vice versa. Now once having calculated the efficiencies, then I'll go on to the regression modeling techniques where I'll actually calculate the actual error. So for that actual error, we have 5 different metrics, that is mean absolute error, mean square error, root mean square error, mean absolute percentage error, and median absolute error. And getting that will actually give, using regression modeling techniques will give me the actual error of the predicted value of the close price from the actual price, from the actual value of the close price. So my sequences will be, first I'll start with the hypothesis testing, then I'll move on to the classification modeling, and then later on I'll move on to the regression modeling. Now let us come on to the business understanding. So for business understanding, because I have taken my HDFC data set is under consideration, so I have tried to understand the technical analysis of HDFC stock as to how strong this HDFC stock is, and also trying to understand the fundamental analysis from the fundamental perspective of how the HDFC stock is performing. So right now we can see that 52 weeks high for HDFC Bank shares is around 1305, which is quite healthy trend. Market cap value is around $4.98 trillion, which is actually, if any company has more than $10 billion, it's actually a large cap company. So this is HDFC stock is a large cap company, and its CAGR, it's a cumulative average growth is also around 20%. It is increasing in the last decade. This has been increasing not for 1 or 2 years, but in the last decade, complete 10 years, year on year, it has shown a CAGR of 20%. So this means that HDFC stock is an excellent stock for doing any kind of modeling, because it will give me more kind of prediction consistency. And the technical analysis also, if I see technical analysis, obviously based on the current price action thing, based on the volume and momentum and the price, actually this is this is evaluated. So some of the technical indicators, like one of them is RSI. So RSI of 57.53 means it's a upward trend. MACD also indicates that it is an upward trend. Stochastic says that the stock is overbought. So overbought means, obviously, again, this is actually quite a healthy trend, because most of customers, most of clients are interested in this. But then this is a kind of caution where we are saying that, okay, we should wait for some time before giving it again a buy call. So, but still, it's a very positive feedback, because most of people are interested in this gypsy stock. ADX again is 41.9, which shows a very intense trend, and because other technical indicators have shown upward trend, so obviously this is the IDX is showing the intensity of the trend. So obviously the intensity trend is also higher, and it is an upward trend which is being shown by the other technical indicators. Then the data understanding, that the data set that we have taken over here under consideration is the Egyptian stock. So here the Egyptian stock that we have taken is, we have different kind of series. We have equities series, we have future series, we have option series, we have different kind of series based on like what is the nature of the data that is being taken for consideration. Here equity series means this can be used for, like it's actually used for demat trading, where you can you can use it for delivery trading also, you can use it for intraday trading also, based on your comfort, where you are feeling comfortable. Here some of the let me go on to some of the feature variables that we have taken, which are going to be using for modeling purpose. Previous close, which is referring to the previous day price, opening price, the first price, high is the highest price, low is the lowest price, close is the last price. Now this is going to be our target variable, whereas the other variables are going to be the independent variable, volume weighted average worth, and then volume and share turnover. Volume again, now based on the volume, we actually getting the volume at the close of the day. So what we want is that we want a lag data for this, and in order to get a lag data for this, what we'll do is we will actually ignore the first row volume, and we'll actually shift everything one day with a 1 day lag value. Then so some of the steps that we have taken in data preparation. So some of the steps that we have taken is, we have handled some missing values. Some of the columns were there, like trades, delivery volume, they had more than 100 missing values. We dropped those missing values. We could have used mean, median, mode computation, but that would not have given me like the correct data distribution, because number of missing values were more. Then feature engineering, here we have taken simple moving averages for 13 days, 20 days, 100 days, 200 days, 1 day fewer lag of volume is also added as a derived feature. Here we have used mean max scaler, which what exactly it will do is, like it will scale the price to close value, or all the feature value within a range of, like here we have taken range of 0 to 1. So what it will help us doing is it will make the variation in all the data to be very uniform. So that will actually help us in doing the right modeling, and actually able to get a right prediction from the modeling that we are going to be utilizing. Here again, some of the descriptive analysis, hypothesis testing, we know that we can have two-tailed hypothesis testing, we can have one-tailed hypothesis testing. Basically here I have what I've tried to do is two-tailed hypothesis testing. So the hypothesis testing, obviously what we understand is that, if suppose no if suppose we take some p value, we take some no that's called as some confidence value. So if it is less than, if we take an assumption that, okay, if the p value is less than 0.05, then we should reject the null hypothesis, and we should say that we should go for the alternate hypothesis. So why we take the concept of null hypothesis and alternate hypothesis? Because no, we could have taken the entire population, and could have taken the entire population mean, and could have directly straight away evaluated that, okay, whether the entire whether whatever my current mean is there is whether it is less or more. But we are not taking the entire population sample, we will be taking only sample mean, and that is why the hypothesis testing becomes more important. Modeling testing here we'll be doing initially we'll start with the hypothesis testing where we'll be doing one sample t test, we'll be doing one sample z test, and then later on we'll be following with the classification model where we'll actually be comparing the classification model accuracy with the hypothesis testing accuracy, whatever accuracy we got from the hypothesis testing and classification modeling. Classification modeling we have used some of the classification modeling techniques. AutoKeras we have used, K-NN classification model we have used, logistic regression we have used. So logistic regression is the simplest classification model that can be used based on and little going higher is K-NN classification and then AutoKeras. Then after that we have tried to do even ARIMA modeling because it's our time series data. But ARIMA modeling we actually try to do ARIMA modeling on the data set. But initially we did an ADF test and we saw that ADF test actually it was failing in the ADF test. So because if it is failing in ADF test, that means the data that we have, data set that we have, data under consideration that we have is not stationary, and because data under data set under consideration is not stationary, so this is not suitable for ARIMA modeling. So that is what the kind of assumption analysis, the kind of conclusion we are actually able to get from this. And even after doing ARIMA modeling, we try to do auto ARIMA, but auto ARIMA actually automatically selects the P, D, and Q components, and based on that, it decides, it gives me the best AIX or the best BIX value. And after doing that ARIMA modeling, also like I was able to get some MAE, MSC values were pretty higher. So that also gave me a conclusion that ARIMA modeling is not suitable for the current data set under consideration, that is the agency data set, because here it actually failed in the ADF testing. Then later on we went on to the regression modeling techniques. Some of the regression modeling techniques that we used here is OLS, Lasso, CV Lasso, KNN, decision trees, grid search, CV, random forest, XG boost, PCA with LSTM, and PSC with LSTM with moving average variables. Here we do some kind of feature engineering over here, and then we went to the LSTM neural network and AutoKeras. Now these are the results of our now the final results that we came up with. We try to understand like what exactly we got when we do the hypothesis testing. So when we had a 7-day moving average, so for that the efficiency was 77%, where actually it was able to predict the thing in a right way, predict the output right way for 4,114 times, whereas it was not actually able to predict the right output for 1183 times. This was the result of our SMA, simple moving average 7 days hypothesis testing, and overall efficiency was 77%. Then the next based yeah,
And you
yeah,
have to move little faster. Your time is up.
okay, yeah. Okay, yeah. So next base is exponential moving average 76%. Then later on we have this model evaluation for other classification modeling. The highest accuracy that we have got is lossy regression, followed by AutoKeras, which gives me 84%. And after that, auto ARIMA, we are able to see that all MAE, MSE, MAP values are not satisfactory. So we will not take that into consideration. Then we have some of the some of the regression modeling techniques that we have used here, and we can see here we have taken MAP and MAE as the metric to finally evaluate which is the best model. So OLS linear regression model seems to be the best one, random follow the random forest. And then yeah, then we have done some other modeling here. Again, you can see regression model using AutoCAD has also given me good quite good results. Now what is the deployment phase that we have what we have thought about is that we have different stocks, we'll have different stocks, and we'll be putting on a dashboard different stock shares, what is their MAE and MAPE, and based on that we'll decide which of the stocks is giving me better results in terms of efficiencies. Now this is the results and insights. So as we have already seen in the previous slide also, you can see the SMA7 sample has given me the 77% efficiency. In predicting whether the value is 0, 1, or 2. And AutoKeras is the logistic regression is the highest one for the AutoKeras. And then when we are trying to get the MAE, MAPU values, when we are doing the regression modeling, then we can see here that OLS linear regression model has been given me a good MAE and also a good MAPE, even in principal component LSTM. Random forest also has given me good MAE and MAPE. Regression model using Autokeras have given me good MAE, MAPE. Others, some of them were able to give good MAE, but they were not able to give good MAPE. So if the good MAP is not there, then that's again one of the consideration we have taken is MAP should not be less than 33%. If it is less than 33%, I have rejected that model to be giving a good value. So what is the what is the future work that we are trying to do? Whatever we have done, whatever you have done is initially starting with hypothesis testing, followed by classification modeling, and then going to regression modeling. So if these techniques are very simple, easy to understand, easy to implement, if they utilize the same procedure for any kind of data set. Right now we have taken SGFC data set under construction is there, but any kind of data set we take and we try to forecast buy or sell choices, it will be quite helpful. I'll not say that 100% predictability because it's based on the data set and based on the volatility in the market, but still, because the number of model techniques, number of sequences that I've tried to go through, that will be definitely helpful, is what I believe. And then what are the challenges that we have to do take care in future is that we have not taken care of the bullish and various regimes that will be there, that is recession period or the bullish period. So we'll actually do further modeling on that and try to identify which is the bullish regime, which is the bearish regime. Based on that, we'll actually able to give a correct judgment, also more correct judgment on what exactly should be the prediction of us. Sentimental analysis approach is again one of the modern approaches that I have not taken care in this project, which I would like to take up later on. So this is all about like a rough sketch of all what I've done in my capstone project. Over to audience.
Couldn't have put me in a more difficult, presentation. Time series model. My PhD is in time series modeling, so I'll not. I think I'm assuming this is your first year project, correct?
Yeah.
All right.
Yeah.
I mean, I think I missed the business part of the presentation. I think the presentation from a technical perspective was very good. But I missed the business part. There are some number errors in your deck. Please fix it. Either you use 0.33 for 33% or use 33. I saw both. There's some number errors. My only comment, don't have a question. My comment is, I think you should stock, which is the HDFC equalized stock. I think doing it's extremely dangerous to just pick up one stock and say OLS works the best. It might work best for HDFC. Does it work for other stocks as well? Even if you're taking only large cap, it might not. So I think you have to extend the analysis, at least get around 10 stock size in large cap only. So we can say that in large cap, this works. As another extension, you should be thinking of using some ensemble methods, because we know some of the methodologies won't work just because of what it is. So I think we are try to do a lot, which I commend you on. We are trying to do a lot in a very extremely short period of time. I would have preferred you doing a lot more depth with little or less number of algorithms. You should look at ensemble for the future as well, where you can combine some of these techniques together. That's my comment.
I have used XGBoost and Random Forest, which are actually ensemble models.
But so they are and they aren't. So when I say ensemble, I know because let's say in some time OLS will work best, sometime XGBoost might work well, sometimes ANN might work well, right? I just don't know right now. So combining these algorithms won't be a bad idea.
Sure.
Sorry, no questions otherwise, Anand. It was a good one.
Thank you.
Thank you, Anand, for the presentation. So whatever I wanted to ask, Santosh covered everything. I think you explained all the methods, right? What you have taken. And I know that you are doing a project and you will look at various method. Basically, it's for learning. But I want to give a comment on the presentation perspective, right? At the end of the day, you are presenting to a stakeholder. And some of the details, what you have showed here, one is I was lost when, I mean, first of all, in the slides, there are a lot of text, text data and information. And there was, I mean, whatever you were telling, right? I mean, I had to figure that out that, okay, from where you were presenting, right? So maybe putting a cursor would help, reducing some of the text and put some of these into your, I mean, backup slides will help. And I'm talking from a business perspective, right? When you are presenting this to a stakeholder, who probably wants to know about the business problem statement and your findings, right? So you can look into that. Second, I think that ensemble model, because you showed so many things, right? I was struggling to figure out that, okay, okay, what is the final conclusion, right? I mean, okay, the maps are high, low, whatever that is, right? So what am I going to do with that? So I think the suggestion of combining all the models together, maybe you can put a voting or whatever method you take it, right? You do that and tell that, okay, this is what, at the end of the day, this is what I am recommending, right? Again,
So one
HDFC,
thing, sir.
yeah.
Yeah, one thing, sir, I wanted to. I think I might have missed out in actually putting out my intent. So I have actually put a leaderboard, like all of the other places. I have put a leaderboard like where I have taken around 10 models, and there I have actually shown MAE and MAP, and based on those two factors, I have decided which one is the best one of that. So out of that, I have actually taken now two of them have given me the best results. Like I have taken one factor is MAP should be more than 70% around, and ME should be less than zero point 0.5. And based on those two, I was having a leaderboard where I'm having a lot of modeling techniques. So, as you said, on one data set, one modeling technique will work, whereas on another data set, some other modeling technique will work. So based on that, like I have given that, okay, these two techniques were best in the SDFC data set. So based on that, again, it will differ from the data set to data set.
So that's fine. I mean, from a project perspective, from a reporting perspective, you are showing whatever you have done. You are showing the leaderboard. You are showing the output for HDFC for which you have worked on. Everything is fine. I'm talking from a stakeholder perspective that at the end of the day, what are you telling? I mean, you have all the data there, but what should I do, right? So if you can highlight that, okay, I mean, in your slide that, okay, this is the leaderboard and this is what for HDFC I am recommending, right? The other points, Santosh has already mentioned that, okay, it is for one particular stock and then you are recommending something. So maybe, I mean, in the beginning of your presentation, you could have told that, okay, I have done this for one. We can't conclude for all other stocks. And HDFC, you only said that it's very well-defined stock and all those. What happens if the stock is not that well-defined, right? If there are a lot of missing data. So a lot of assumptions would come in there, right? So those things, I mean, these are things which you can look into because these are typical questions which will come when you present that to a stakeholder, right? Uh, Rest, I don't have any other questions. These are all comments, as Santosh also said. Right.
Thank you, sir, for your comments. Valuable suggestions. I'll definitely try to incorporate them and try to improve on them.
Okay.
Good luck.
Thank you.
Thank you. Thank you.
Yes. Anmogan,
Can I
thank you
leave?
for the
Shall I?
presentation. Anmogan, thank you for the presentation. Can you share your PPT presentation to program office?
Sure, sure. I'll do that.
Yeah. Yeah. Okay.
Thank you.
You can leave. Thank you.
Thank you.
You.
Sir, can I call the next participant?
Can you give me 2 minutes?
Yes, sure.
Just 2 minutes break.